Long-held ideas of how finance and banking should look have delayed established banks from digitalizing all services. Instead, traditional GCC banks have established internal challenger banks as a way to innovate and to experiment with new products and services. And we're joined by Rami Deeb, marketing manager at consumer intelligence company Talkwalker. Thanks for joining us, Rami. Now, your new report reveals that these GCC challenger banks are really gaining more popularity than their parent banks, and you looked specifically at Live Bank, Mashreq Neo, and Meme Bank. What's giving them an edge over their parent banks?
Thanks for having me, Ramya. Yes, indeed. So the reason why we actually did this report is because at the end of the day, finance and banking institutions have a direct correlation to people's livelihoods. So this is where we wanted to start, from the consumer, right? The competitive edge for challenger banks is their ability to get closer to the consumer in real time and leverage an added layer of data, whether through social media, through review sites, and through chatbot data, for example. This ultimately gives them an agility and a speed to make decisions and to innovate better compared to traditional banks, which are more, there's a lot of hierarchy and bureaucracy internally to make decisions because it's a higher risk, obviously. So by establishing this direct and seamless experience for consumers, we saw that challenger banks are at a much better position to be customer-centric and to be resilient for macroeconomic challenges, especially in this environment, as you might already know. So challenger banks have a clear and definitive edge over traditional banks in the short term, and they can build on that to be bigger and more popular for the long term.
So time is really of the essence. And when you measure online mentions of challenger banks and their parent banks, which of the two gets more mentions, and what are people talking about when they mention challenger banks versus the parent banks specifically?
Wonderful question. So during our study and our research, really we saw that challenger banks got around 1,500 mentions in the GCC region during the past year, compared to 19.1 thousand mentions for traditional banks. But the caveat here really is about the flow of these conversations. So traditional banks, for example, they don't have this direct connection to consumers. So they rely heavily on press releases, on media interviews. They have, any sort of, they have like an intermittent pulsing of news. So they don't have this steady stream of conversations with their consumers. Whereas challenger banks, as we saw in the study, we noticed that they have a steady stream of conversations throughout the year. Now, this gives them a clear advantage, right? For example, you are much more able to pivot in case of a PR crisis, right? You are not solely relying on those announcements or campaigns or product launches. Whereas challenger banks have this direct connection from brand to consumer. So we see a lot of the conversations happening about suggestions, about support, about complaints, about celebrating the brand directly, right? Because it's so very rare that consumers put out a positive review. Usually when people post online, it's, they're complaining, they want to raise their voice. But with challenger banks, you see people are happy. We see this positive conversations happening compared to traditional banks, which don't necessarily enjoy this in the online space because it's a more face-to-face.
Let's break this down. So what challenger bank products and services are people really talking about the most here?
Yes. So speaking of products, yes. So we did this study and we looked. So the top 3 products that people have been talking about in the GCC are mobile banking, as well as buy now, pay later services. And the third one is actually cryptocurrencies. And we are seeing this spike in topics specifically among the Gen Z population, which is only normal. But this is a very critical insight for traditional banks to see what type of services they want to build in the next 10 to 20 years ahead. So those 3 products are the most spoken about in terms of volume. However, sentiment, we see a shift in that direction.
Okay, your topic analysis also identified fraud, crime, and support as key negative conversation drivers. Now, without naming names, what's behind the negative sentiment for traditional banks, Rami?
Yes, so the big elephant in the room is really customer service. As I mentioned before, people go online to complain about, a bad experience, their inability to close an account, or they want a bank branch to open. So traditional banks, as with any business really, all goes back to the consumer and really serving their purpose. But as you mentioned, there's also a huge increase in the amount of conversations related to fraud, to data security, to hacks, to all those sort of things that we previously did not see emanating in the region. There's much more awareness to those challenges and obstacles, and banking institutions are working diligently with regulators to establish these frameworks to hinder money laundering, for example, or crypto frauds, for example. So while those are opportunities for growth, there are also breeding ground for all those obstacles, and you really don't want to establish distrust at this stage. And as I would like to say also that we are in a transition phase in the GCC region between traditional banking and challenger banking, and it is this very intricate process that we go, as banking institutions, they can transition safely and while maintaining market share.
Thanks so much for joining us, Rami. Rami Deeb, Marketing Manager at Talkwalker.
Thank you for having me.